crucial. Just a quick visual, sort of any aviators in the crowd might appreciate this, metaphor, but, when you're running your business, you want to be able to see everything, see what lies ahead, what the trouble spots are, have all the instrumentation. But the reality is, you're largely flying in the dark. And again, even more so these days. It's really uncertain, what the recovery is going to look like, how we're all going to be impacted, et cetera. So it's just sort of punctuating the point that we're all facing here. So quickly into some of the cash flow hygiene items and sort of categorized by the different areas. So a couple slides here to walk through, and every business is a bit different. So these are pretty generic. If you have questions about this at the end, we can, I'll do my best to talk specifically about how certain businesses might react or might be impacted. But when you're looking at your outflows, again, most of this I assume will be obvious, but look at all non-essential spending and tighten up that as much as you possibly can. If you have any investments planned now or even a few months down the road, you might want to look at delaying those or altering those in some way. Even if you have a contract with a supplier, start talking to them now about that investment and whether or not it might be something you can work on. You always have to consider staff options. This is clearly one of the most difficult decisions that we have to make. There's a couple different levers you might have. Looking at reducing compensation levels, wages, hours. Looking at furloughs, and of course, layoffs always being the hardest, but something to consider. Extending payables, looking at what you owe, and talking to those vendors about, are there ways to get creative around extending those? Some folks might be willing to accept a somewhat larger payment, but over a longer period of time. You can get creative there. The thing to always remember, though, is your payables are someone else's receivables, so they may be trying to do the same thing and shorten their receivables. So if you look at your inflows, you'll obviously want to accelerate receivables to the extent you can, and similar tricks can be deployed there, where if you have receivable, you might take a lower amount to get it quicker, or you might get on some sort of payment plan. There are a number of different ways to try to accelerate those receivables. Consider adjacent revenue opportunities. If your operations are impacted by this, if you're forced to shut down or forced to stop doing certain things, there might be adjacent revenue opportunities that don't require significant investment. They might just require a little bit of creativity. So consider what those might be, and also look into your insurance policy. Talk to your insurance agent. There has been some controversy around business interruption insurance and whether that's payable during this kind of an event. And I think different policies will speak to that differently, but it's certainly worth a conversation with your insurance agent. The next set of sort of standard cash flow hygiene, you look at your financing options. If you have a line of credit, that's what this is for. Draw that down to the extent that you can. Put that cash away, have that ready, use it judiciously. Talk to your bank about existing debt that you might have. So you might have real estate loans, working capital lines, et cetera. You might, talk to the bank about if there are payment options to either, pause payments, reduce them for a period of time. Many banks have been proactive on this front, and it's always worth having that conversation. If it's SBA debt, existing SBA debt, the SBA has come out and they put measures into place to allow relief, either stopping payments or reducing payments. Most of those loans are facilitated through the bank, so you have to talk to the bank about that. If you have any seller notes, talk to the seller, see if there's any flexibility there. Again, can you extend things, pause things, sort of rework the deal, have an open conversation about that. And discuss, if you have existing investors, certainly go to those folks first, see if they have any ability to help out, whether that's through bridge loans or injecting additional equity. There are investors out there who are active right now. Again, depending on the industry, depending on the nature of the business otherwise. I will warn you, you won't get the best terms in the world if you're taking investment now, but it's certainly worth exploring depending on your situation. And then there's the last couple points here on planning. These I firmly believe you should be doing this anyways. But whatever your accounting system is, and I use that in quotes on purpose, if you have an accounting software, QuickBooks or whatever, keep that up to date daily, every couple of days, at least weekly. If your system is your kitchen table with envelopes and notepads, now's probably not the time to switch over to QuickBooks. Whatever system you're using, just keep that up to date would be the guidance here. And then if you haven't already, create a 13-week, 1 quarter, 2 month, however you want to think about it, cash flow forecast. And look at all the accounts, look what's coming and going, look at historicals, and update that frequently. So those are, again, relatively general, generic cash flow hygiene that can be used at any point in time, but I think are more pressing now. Given how far we are into this crisis, I suspect most of you folks have already looked at all these items, but again, just sort of bears repeating. And then the last thing I'll say as it relates to cash flow, now more especially than ever, but even in good times, communicate. If you're having a cash flow issue, talk to your employees, talk to your accountant, talk to your banker, talk to your chamber, talk to your trade group. There could be good advice out there and other folks who are going through the same thing. So always good to communicate. So that's, again, hopefully helpful, but again, sort of standard sort of information around managing your cash flow. Getting into the Paycheck Protection Program. So just before we get into the forgiveness aspect, wanted to cover some interesting stats. So round one, sort of early April, this is what it looked like for Connecticut. There were 18,000 loans. The second round, which was sort of started end of April, and it's gone through the last couple of weeks, there have been 34,000 loans, much smaller loans. So the average in the first round was 225 grand. The average in the last round, or the current round, because there's still money out there if folks need it, has been about $78,000. So, and just to put this into perspective, so in the last, call it 6 weeks, there's been 53,000 loans made for just shy of $7 billion, just in Connecticut alone. When I was doing SBA lending in Connecticut, a good year was about 220 million. So a year at 220 million versus 6 weeks at 7 billion. It's basically 30 years worth of lending inside of 6 weeks. So I know there's been a lot of negative press around how the program has been administered and some of the flaws, and that's all fair criticism. But when you think about the magnitude of what's been done over a short period of time, have some patience for the folks that are doing it, I guess would be my my advice. It's truly been remarkable. So the assumption being that most folks who wanted a loan have been able to get a loan, and if you haven't, certainly talk to your banker. But now that we're in the phase where the money's been largely deployed, we're in the phase where we need to think about forgiveness. So and just to be clear, because there is some confusion around this, what you receive from your bank is a loan. It's not a grant that might convert into a loan. It starts out as a loan. Down the road, you can request forgiveness, and part of that loan might be forgiven. But what you do have is a loan. It's a very good loan. It's a loan for 2 years at 1% interest with 6 months of deferred payments. So even if you don't get any forgiveness, it's a very good loan. There's no collateral. There's no personal guarantee. I assure you, you will not get a loan like this anytime soon. So it's a very good loan to have. If you are thinking about applying for forgiveness, and you don't have to, but certainly many folks will, these are some of the things that I would highly recommend doing. And number one might sound, sort of silly or inconsequential, but it might be the most important thing I can talk to today, which is document the reasons why you got the loan or why you requested the loan. It should take you 10 minutes, just, a memo to the file is all you need. But when you filled out the application for the loan, you certified that you needed the loan because of the current uncertainty, the current economic uncertainty, which is a pretty broad phrase. And it's important that you remind yourself why you did this. There will be audits, there will be investigations, there will be whatever down the road. And if someone ever asks you, hey, back in April of 2020, why did you want that loan? I know I would struggle to answer that question because we're sort of in the fog of war. Things are changing every day, and it might be hard to remember exactly what the issues were that were facing your business. So I would sit down, just write out the reasons, put that in your file so that if anyone ever asks you down the road, you can quickly show them that document or read from it. So really important to document the reasons why you need the loan, as well as documenting the steps that you take during the forgiveness period, which we can talk about in a minute. The other thing I'll highlight, the Treasury has come out pretty forcefully to say that they will audit any loan that was over $2 million. So if there's anyone on the phone who received a loan for $2 million, keep extra good notes and extra good documentation of why you got the loan and how those funds were used. It is very likely that someone will ask you about it later. 3, this advice has been out there to open up a separate deposit account to put the loan funds and payments coming out of that. It's definitely not a requirement. If it works for you, I think it's reasonable advice. But a lot of folks have automatic payments. They have a process that they use with their payables that's dependent on a different account. So if it somehow disrupts you and knocks you off your game to open up a new account to put funds somewhere else, I would say don't bother. It's not required, but it's certainly decent advice. It keeps the accounting relatively straightforward if that's something that you are interested in doing. Mind the tax implications. Again, not an accountant, but there will be tax implications here. The one notable one, which I'm sure most folks have heard about, is if you incur an expense during the forgiveness window, and that expense is later part of the forgiveness that you receive, you can then not include that expense as a deduction at the end of the year, which sort of makes sense. Someone's paying for the expense on your behalf, so you can't then take credit on the tax side. And I'm sure there'll be many others. So as you're going through this, talk to your accountant, seek advice on that front. There will certainly be other tax implications. And then the final, sort of potentially most unnerving thing I can say is the guidance isn't final here. We don't know exactly how this is going to play out, and I completely appreciate that makes it difficult. Especially if you have funds and you're in your 8-week period, not knowing exactly what the rules are while you're playing the game is not a great place to be. So I completely sympathize with that. Unfortunately, that's sort of where we are. And we don't know exactly when we'll get final guidance. I was told by someone at the SBA they were shooting to have guidance next week. I have no idea whether we'll see that or not. There's also been a fair amount of discussion in Congress about addressing some of the questions that are left open in the PPP, or sort of in the CARES Act rather. Congress may try to approach those and clarify some of that. That'll take time, but my understanding is there's active negotiations and discussions there. So one way or the other, either through the SBA or potentially through additional legislation, we will get clarity on this. But stay tuned. I'm sure the Chamber will do a good job of publishing some of that, and you'll see it elsewhere as well. But everything that I'm about to tell you is based on what we currently know and what's currently in the CARES Act. So the 3 big things to keep in mind are the 75% rule, 8 weeks, and permissible uses. So the 75% rule is you need to spend a minimum of 75% of your loan on payroll expenses. And there's a definition around payroll expenses, includes things like retirement, everything else, which we can talk about in a second. But if you spend at least 75% of what you receive in your loan on payroll expenses, you'll be in relatively good shape. The 8 weeks. So be very careful about the 8 weeks. So the day that you receive the money from your bank, that started the clock. So for many of you who receive loans, that you're already in the 8-week period. And you need to be mindful as you go through that 8-week period. Watch your expenses to make sure that you can sort of optimize the forgiveness when it gets to the end of the 8 weeks. And then third, the permissible uses. Again, payroll is the biggest one. Mortgage interest, rent, and utilities. All of those things used together will be the inputs for determining how much forgiveness you're eligible for. So spend as much money as you can on payroll, do it over 8 weeks, and whatever money you don't spend on payroll, if it's on mortgage, rent, or utilities, you'll be in good shape. So other impacts on the forgiveness calculation. So the quote from Treasury effectively reiterates what I just said, which is loan amounts will be forgiven as long as the loan proceeds are used to cover payroll, mortgage interest, rent, and utility costs over the 8-week period after the loan is made, meaning the day that you receive the money. And employee and compensation levels are maintained. So to keep it super simple, if you received $100,000 and you use that $100,000 to pay payroll over the course of 8 weeks, you're very likely going to get 100% forgiveness. If you don't, then these are some of the other things to keep in mind. So, if you received a $100,000 loan, but you only spent, $70,000 across those permissible uses, then, very unlikely you'll be able to get forgiveness for the $30,000 that you didn't expend during the 8 weeks. We already talked about payroll being at 75%. FTE levels, so if you reduce FTE, that will negatively impact the forgiveness. If you reduce compensation, that could negatively impact your forgiveness. And the way it's written now is if you reduce compensation levels more than 25%. So if you reduce them 25%, it might be okay, presuming you do spend the money, but that could impact your forgiveness. However, as soon as I say that, you could then effectively wash those things out if you attest to resuming your FTE level and compensation levels by June 30th. And then the other thing to keep in mind is if you, separate program, the economic injury disaster loan, if you received an advance through that program, you could have received an advance up to $10,000. If you received an advance, which is effectively a grant directly from the SBA, it was a separate application process unrelated to PPP. But if you received a grant, any monies that you received through the Economic Injury Disaster Loan Advance Program would be reduced from your forgiveness. So again, simple math, if you got a $100,000 PPP loan and a $8,000 EIDL grant, if you played by the rules of the PPP forgiveness program and you were eligible for a full 100% forgiveness, that forgiveness would be reduced by $8,000. So you'd only get forgiveness of $92,000 because you were given $8,000 through the other program. So they don't want you to double dip. So those are the key levers to think about that will impact your ultimate forgiveness. Some of the clarifications that we have received, so the CARES Act was signed sort of end of March, and since then we've been getting updates, sometimes daily, from the SBA and Treasury. What we know thus far, or what they've specifically clarified, the 8-week period begins on the date the lender makes the first disbursement of the loan. So pretty straightforward. So you can see in your bank register when you receive the loan, that starts the clock. Payroll costs do not include the employer's share of payroll tax. So what you as an employer pay for federal withholdings, et cetera, that would not be included in payroll tax, and that's consistent with how the loan amount calculation was used. A recent clarification was wondering if you had to reduce headcount, offered to rehire someone, but the employee declined the offer. There was a question around how that would impact you. The SBA has clarified that that will not impact your forgiveness. I think there's still an open question around exactly how it won't impact you. And we'll look for further clarification on that. So those are the specific items that the SBA has clarified thus far. But as I said, much more guidance to come, hopefully sooner rather than later. So that's my quick take on PPP forgiveness. You know, what the sort of the rules are, the best way to prepare for it, understanding what some of the levers are. Quick plug before we go into Q&A. As I said, I've left Webster, now run a software firm. We help small businesses with cash flow projection, financial optimization, et cetera. We're in a soft launch right now. So if there's anyone on the phone who wants to get access, it's not something that we sell directly to small businesses. So we give it away to probably a handful of folks now, just to get folks using it. We'd ask for a little bit of feedback. So if there's anyone online who uses QuickBooks as their accounting package and wants access, happy to handle that offline. So that's my quick plug, but happy to answer any questions that folks may have.
Excellent. Thank you, Steve. That was really good.
Sure.
Very informative. And if you want to stop, if you stop sharing your screen, and we'll get everybody's morning faces back on.
There we go.
Excellent. I appreciate you sharing. I'm actually waiting on PPP, which is, and I liked your comment about the timing of getting PPP. I was very anxious to just get approved and move on, but with a closed business, getting PPP is much more challenging than with a business that is about to open. So I kind of like the new timing of still waiting for approval. So as you can imagine, I'll kick off the questions and then pass it on to others. And I have a handful, so I'll just do one right now.
All right.
But as an owner of an LLC, my wife and I are 50-50 members. I wish she was 51 because we would have gone after an additional loan for women-owned businesses. I made that mistake. She should have had 90%. But in the calculation, when we did the application, we got guidance that we could use our distribution. We're not employees, right, but we are LLC members, and we take distribution, and that's on our K1 tax form, like Schedule C it used to be. So is that included for forgiveness purposes? Is that considered to be a payroll expense?
The short answer is yes. There is they did clarify that. I'll try to find it while we're chatting, but they did clarify that things like owner distributions, you may also take guaranteed payments, those types of, pretty common vehicles for owners of an LLC to pay themselves. Those were clarified as being eligible. The one caveat, of course, which applies to everything, is it's subject to the $100,000 annualized cap. So if those distributions or guaranteed payments come out to more than $100,000 on an annualized basis, you just have to reduce that amount, both for the loan application and for the forgiveness request.
Excellent. We
hey,
barely make minimum wage. Sorry, Chris.
I want to second what Mike is saying for those. Can you hear me?
Yes.
Hey, I want to second what Mike is saying around the timing. And we own a retail store in Rochester, New York. There's 40 employees. We've been shut down since the beginning. We got PPP funding right away. Actually, the money hit the bank April 15th, and we're screwed. We're screwed because, one, I can't really reopen because no one wants to come back to work. And two, we've seen countless retailers open and have employees and customers just at each other's throats for reasons that my mom just will not open the store. She's not going to let people. She'd rather be closed and eat it for another month than to have to deal with seeing everyone's fears and frustrations come out at their worst. So, is there a way to qualify and delay receipt? Because once that clock starts ticking, that 8 weeks goes fast, and we'll make it through the chunk of our money, but it won't get used for nearly as good of things as it could have had we known how long it was going to be and what the ramp up period was really going to look like.
So there's no mechanism that I know where you can delay the money, right? So the
Closing is closing.
Yeah, I mean now look, subject to further guidance, there are folks out there in pretty significant lobbying groups making proposals to allow a business owner to customize that 8 week period. So to address specifically what you're talking about, Chris. So if they're not open, how do they, the counter argument that I've heard folks say is, well, the point of the Paycheck Protection Program is to pay folks regardless of whether or not the business is open. So even if you're paying people to sit home, it's
they're all making more money sitting at home. They're actually all making $600 more a week, a $30,000 base pay above and beyond what we pay them of $12 to $15 an hour. Just so they're reluctant.
Completely understood. Yeah, there's the CARES Act had two what might turn out to be competing provisions that may not
Flaws.
be flaws. I'll call them competing provisions.
Steve, a good example. Oh, sorry. I was just going to mention a good example of that. What Chris is talking about. We have 5 receptionists that my wife and I have a hair salon, and 2 of our receptionists are more full time. More hours, and 3 of them, one of them works 5 hours a week. So
you got your $600.
Bringing her back for 5 hours versus staying home and collecting $600 plus whatever nugget for her 5 hours is that's where there's a challenge. So just a quick follow up on comment, and then I want to hand it off to others as well. You mentioned and I think the guidance is still maturing, but you mentioned how do you handle the situation from both ends? Employees that don't want to come back because they know they'll get that $600 federal payment weekly until July 15th. How does that work? And I don't want to force anybody to come back, but I also don't want to do anything that's not business ethical as well. And so how do you handle that relative to forgiveness and relative to the unemployment rules?
Yeah. So what we know now is the SBA said in that circumstance where you had to let someone go, you made the offer to bring them back, and they refused for whatever reason, whether it's the unemployment benefit, they have to teach them, whatever the reason, they've declined the offer to come back. The SBA said that will not negatively impact your forgiveness request. However, they didn't explain exactly how it won't impact you, because there's a couple of ways where that could impact you. So if you were going to pay that person, $5,000 a month, over the course of 2 months, and you're now not going to spend that money, one question would be, how do you get credit for that $10,000 against your forgiveness, even though you didn't pay it out? So that's one question. As I mentioned before, there's the FTE test. So presumably, if you reduced headcount, that person who refused to come back wouldn't count against that FTE test. But these mechanisms haven't been made clear. So I know that's cool comfort, or not much comfort for the question, but the spirit is that the SBA doesn't want to negatively impact the business owner in that case.
Yeah, I think the most important thing for me in that case, and not so much the one employee that's 5 hours, but the collection employees that may not, you can't achieve the FTE equivalent of where you were, or the 75%. Will the final verdict be you need to then return that portion of the funds, or could you use it for those other?
No. You'll never, never say never, but my view is you'll never be forced to return anything, right? This is a loan. You never even have to ask for forgiveness. You can, if you want to, you could take this loan, use it however you see fit, make the payments, right? That's important. You have a 6-month deferral period, but make the payments. It's a 1%, which is, great rate, fixed rate for 2 years. It's a great working capital loan. If you want to use it that way, you can. So you'll never be forced to give the money back, unless you took it for untoward reasons like Shake Shack or one of the other guys.
Right.
Mike.
All right.
Mike.
I'm gonna pop around. I'm sorry. Oh, who's that?
Oh,
Annette or
sorry.
Donna?
Oh, it's Annette. Yeah.
Yes.
I just wanted to say 3 things. One is, it's unfortunate that the payroll protection, for whatever the reason was, people just wanted it the day it came out. It caused a lot of craziness, but it was for payroll. So it really wasn't intended for shuttered businesses. The disaster relief program was really the one that was meant for those, and maybe a combination of the two if you knew when you were opening. But based on Chris's comment, it didn't work for him because he isn't open. So it wasn't really the best product, but people just wanted it because it was free money in their mind, but it really was intended for payroll. And I think what we're finding now, obviously the program is still open, there's still money, we're still processing them every day, but people are now understanding better that it is for payroll, that the timing is now better suited for them. So maybe it was better to wait. Also, the benefit of the disaster relief program is it's a long-term loan, whereas the payroll protection, it is a loan that has to be paid back within 2 years. And that's a pretty hefty payment if you amortize whatever you got over 2 years. So some people are returning the money because you have a period to return the money without any interest. So people have reevaluated their need and are returning the money to the bank so they don't owe anything. So
Right.
It's different ways to look at it. But if anyone had any questions, on what I'm seeing, I'd be glad to answer them.
Yeah, I'm gonna comment on that, but I first want to go to Donna. So, and just comment back on what you said as well. Thank you for that, Annette. Donna.
Thanks for the floor. Steve, thanks for the presentation. Great information. I recently listened to an Intuit QuickBooks town hall. Steve, you probably are familiar with it. And they had a couple of senators on, and they solicited questions from a bunch of people out there regarding this. And Annette actually just addressed what my question or comment was. It was my understanding that there are still monies out there to be had. So Mike, to your point about, or I think it was Chris, but I think it was Mike, to your point about, when to ask for the money, because that 8 weeks gets, eaten up, that time frame gets eaten up really quickly. If I'm understanding it correctly from the town hall that I listened to, there's still monies to be out there to be had. So by applying now or in the near future, there's still monies available. And then that 8-week period obviously extends things a bit more. But Steve, you also addressed the June date, and I don't think a lot of people know about the June date. And I know that's not set in stone, but I believe that there's some contingencies, right, on that time frame extended to June based on these circumstances. If I'm not mistaken, if you could address that a little bit more, Steve.
Sure. And then great questions, great points. And I will say, as of Friday, there was still 120 billion, give or take, undispersed or unapproved rather, through the second round of the program. So plenty of money out there. If you haven't called your banker, please do. So yeah, the good point, Donna, about the June date. And the other thing I'll say is there's a lot of dates, and you got to be careful with these. There's the 8 weeks, and then there's when you're counting FTEs, what the benchmark period is. There's a bunch of dates. Just be careful with them. The June 30th date is where the way the act was written basically gave the owner an understanding that some owners would have to reduce headcount, might have to reduce wages to conserve cash, but also, as Annette pointed out, use the cash that they receive from the loan program to pay those folks largely. If they did reduce headcount and reduce wages, they can still be eligible for full forgiveness if they attest to bringing back the full FTE count and the wage level by June 30th. So there's sort of three tests that one would have to go through when they're doing forgiveness. There's the FTE test. So did you reduce headcount? Did you reduce wages? And then the sort of the reversal is if you attest to resume the FTE level and the wage level by June 30th, that will help your forgiveness request.
Excellent, thank you. Those are all great topics. I just a comment from Annette, what you mentioned, and as a small business owner, with the right timing, there's no better loan for a small business like ours than the PPP. And the reason why, and when I say with the right timing, because it allows us to retain our employees even just before we're opening, to get them excited about coming back and preparing to come back and do the training required based on all these guidelines that are out. But it also, the 25% of it helps us in a small way. It's actually a big way because it's 25% of the loan, but it helps us recover from now over 8 weeks of revenue loss week over week. So I mean, the PPP with the right timing is incredible. PPP
Right.
with the wrong timing can hurt your business and make
Right.
it more.
And that's the thing is the way it was presented in the media was rush out, be the first one to get the money. And I don't think that was the best advice for many people.
Yeah, no, I agree. I was screaming at our bank. I was calling way
Yes,
too
I
often.
got a lot of your calls. No,
Yes.
I'm just kidding.
I'm going to go to, everybody's waving at Steve right now, but I'll go to Pat and then Paul.
Hi, Pat Donnelly. Hey, Steve. Thanks for your
Yeah.
presentation. I thought it was great. I'm in the alternative finance world, and I help businesses access capital when banks can't do it. Really, what I've been doing in the last few weeks is just helping people with the disaster relief, just, and basically sending them to their banks. But I have a quick question for you, and maybe for Annette. Do you know, and I realize you're talking about PPP, but can you just clarify if you receive both EIDL and PPP? So I'm not talking about the grant from EIDL. I'm talking about a 30-year loan, right?
Mhm.
And I recognize that there are some provisions in the act indicating that you can't use both for the same purpose, right? So I think PPP restricts you from taking the money, using it for payroll, and then taking EIDL and using that for payroll as well. I believe there's restrictions. So that's, if you could just, maybe confirm that. And the other thing is, can you use EIDL to refinance debt, to take out debt? So let's say, your PPP loan, you can't get it fully forgiven. Part of it can be, not all of it will be forgiven. Can you take part of your EIDL loan and refinance that so that the unforgiven piece gets amortized over 30 years? Thank you.
Sure. So I'll do my best, and that can keep me honest. So the short answer is yes, you can apply for both. And as you said, Pat, it's pretty clear that you can't use the funds for the same purposes. So, and I think Annette may have touched on this earlier, the point of the PPP program was for payroll, you pay your employees. The economic and injury disaster loan was for other purposes, working capital, inventory, whatever else you might need it for. So the simplest way to think about it is separating along those lines, payroll and everything else. So you can definitely apply for both. As you noted, the PPP loan is a shorter term loan, it's 2 years. IDLs are longer. Interestingly, the way the provision was written, it was actually written to work in sort of the opposite way that you suggested. But I kind of like your take better. So if you received an EIDL loan, you could then refinance that into your PPP. The thinking being, if you took out a loan, because the EIDL loans were available earlier, sort of mid-March. So if you took one out early on, and then when the PPP was available, if that was a better program for you, if you intended to use that, you could then refinance the EIDL loan into the PPP so that the whole thing would be eligible. I'm not aware of anywhere that says if you don't get forgiveness, you could then go back and then refinance that into your idle. But interesting question. I think the other issue is with the idle loans, they've drastically scaled that back just due to oversubscription. So initially you get $2 million, now it's down to 150. They've even shut down that incoming applications at this point. Subject to additional funding through Congress, the idle loans may not be available.
Thanks. Appreciate it. Good question, Pat. Thanks, Steve. And Paul, you were.
I was waving. I was
Oh.
just waving. And Steve, I appreciate what you have presented. This has been great information. Thank you very much.
I'll sneak in another topic or question, Steve. When we computed the data for the loan, it did not, and you commented on that, it did not include employer share of payroll taxes, but it did include the employer share of Connecticut unemployment tax.
Mm-hmm.
So does the payroll expense include that portion? Because it did factor into the 100% of the loan.
Should, yeah. It's just the federal taxes that you can't count. The federal taxes that the employer pays.
Right. The federal and this, yes. Right. The Social Security and Medicare.
Yeah, exactly.
But yeah, so I just wanted to clarify that because definitely intend to, not that it's a huge number, but it's bigger than it should be in Connecticut. So, thanks. Any others that kind of see everybody now? Yes, EB.
Good morning, Steve. Question for you. With the IDL, we put that in right away and we got the email saying the 10,000. I know a lot of businesses have received that 1,000 anyway. We haven't heard anything or received anything on that, and I don't want to unfactor that PPP. Do you know what's going on with funding that? Why some people received it when we all applied early and some didn't? And should I expect to maybe receive it or just assume not? I know.
That's a good question. I honestly wish I had insight into how the EIDL program is being processed. From the few folks who I know who have applied, they say that they're following a first come first served. So depending on when you applied, it's working its way through the queue. I know some folks who have received the grant. So and it's apparently driven off the number of employees you have. So you received a grant up to the $10,000. Some folks are getting that and then not hearing anything for weeks. So there's a fair amount of limbo out there. As I mentioned, the SBA announced last week that they're totally overwhelmed and had to drastically reduce the program. So I would say keep waiting, but maybe don't count on it, unfortunately.
EB,
Yeah.
I've had a lot of feedback from customers that if they call now, the SBA, because this has nothing to do with the bank, but if you call the SBA, that they're actually looking up your file, answering your message, putting the grant money right in your account and telling you where your application is. Like they've caught, I'm not saying it's going to make it faster, but they are answering the phone and helping people. That's the feedback I'm getting. The
Do you have
loans
a
are
number
lot
for
smaller,
them?
though. It's
Thanks,
just
that's
on
great, Annette.
Yeah, it's on SBA.gov website. It said if you've applied, I could look real quick while we're talking, but I don't have it off the top of my head.
Cool.
Yeah, and I know that people are having great success with that.
Oh, good, because we did apply right away and we did get the thank you for applying email, but I haven't heard anything since.
Yeah.
So just another comment on that, EB. If you're talking about the advance, it would show up in your account without any acknowledgement. So we received ours, and just one day I'm looking at my bank account every day to make sure there's something in there, and it just shows up. There was no email that says that it's there. The follow-up, because I applied just for a small amount, the follow-up, they partnered with another provider that would reach out. You would get an email that you have to then do an additional application. And then the process takes quite a bit of time. And then you're waiting, wondering whether it happened. I just got that email yesterday. So there is some communication, but the advanced, there's no communication. It just shows up. But I love,
Yeah, no, thanks so much.
I love Annette's comment because, you know, back a few weeks ago, the SBA was way too busy to answer, to be able to follow up. So if they're following up, it can jump right in your account. That's awesome. Anybody else have questions for Steve?
I don't have a question, but I want to say thank you. You can see our hours wrapping up because people allocate an hour and then they have to go on to the next thing. But Steve Dow, thank you, President Monet, and you're at steve@signalft.com.
Yes. So
If you want to
happy to
reach
answer
out
any
to
other
Steve.
questions.
Yeah, I'll ask my last question, which is really important for me and probably others that are in the situation. For the 25% side that can be applied to, one of the elements is rent. Can it be applied to rent that was deferred or not paid yet from a previous month?
Interesting question. The way the CARES Act is written, it says that payments are eligible for forgiveness if they are incurred and paid during the 8 weeks. So if something wasn't, it's a gray area. I think that's something where I think we're hoping for additional guidance on. You know, what I'm basically telling folks is, you know, if you pay the sort of typical 2 payments of rent during the 8-week period, that's obviously fine. You know, if you had one from a prior period, or you had a payment program with your landlord or whatever, if there's an additional, you know, payment that squeaks in, that's probably not the worst thing in the world. But document it. It's going back to my earlier point. Document why you did it. If it's just, hey, I was trying to spend more money during the 8 weeks, like that may not stand up to scrutiny. But document everything, why you did it, how it was spent, etc. Thanks everyone for your time. I unfortunately do have to jump at 10 for another call. But my email in the chat, if anyone has any questions, happy to follow up.
I do also want to thank Webster Bank very much for sponsoring this. Webster Bank is likely going to be providing Steve's program to its customers in the future. So possibly, and you might find it from other banks as well. As Steve mentioned, you can't actually get his program directly from him, but he's running a beta program. If you're interested, reach out to him. Thank you. Thank you all for being here. Thanks, Mike Ski.
Yes, thank you.
Thanks, everyone.
Thank you, Annette, for sponsoring with Webster and Steve. Thank you so much. I know you have to go, but thanks.
Thanks, everyone. Thanks, Steve.
Thank you.
Bye, everyone.